All right. Please let me know if y'all can hear me. Let me know if the audio is good to go. I have no idea. I'm actually trying out a new mic today, so everything could be totally fucked up, and I would literally never know. Really hope I'm not talking to myself either. Kind of say, oh, 2 minutes live stream, knowing I don't have a large following, so I really played myself. Let me just mark out some levels, and hopefully next time I look, somebody will have responded and said, yep, we can hear you. Some other daily levels. Yep, sounds good. The death of me, I swear, is going to be trying to figure out if I should use wicks or not when drawing order blocks. It kills me because, like, when you look at, and I'm going on a tangent, this has nothing to do with what I'm trying to cover today, but when you look at shit like this, and even though we were dumping hard in this market, there was an opportunity for a long here. And maybe, we went intraday, you could have seen like a div or something, but if I'm just looking at this order block that we were approaching, I never get to go long, right? But if I use like, both the upper and bottom wick, then it's like, bam, I could have, if I spread bids out, I could have had like a partial position, been long a little bit here. So yeah, that hurts. And then even if I don't use the upper wick, which I normally wouldn't in a situation like this, I'd use like the lower wick because, this was a bullish order block. And so I want to see where the buying comes in. I wouldn't have caught that move. And so it's just like, there's no really right way to do it. Before, what I was doing is I would just like take the whole fucking candle, wouldn't discriminate. And then if I wanted like more, I don't even know, more definition to my order block, I'd zoom in, try and figure out what's going on. But I don't know, whatever. Right now, I'm just gonna use the bodies of the candles because I don't know. It's just what I'm doing right now. If I don't like it, I'll do something else. So what do I want to cover? Had a little pullback here, a little down candle. We're pretty much in the same spot where, I'll do it later. But if you take weekly level and you take this order block right here, or I'm just not going to say order block. People are going to get on my nerves with that. But this level here where you have this brief consolidation before we bearishly left, we wicked up here on the weekly and we're currently below it. So a wick through here with a close below would be very interesting. Definitely would start to maybe consider some weakness in this trend, maybe some, just because when we had this weekly level, we actually closed inside of it, and then just some consolidation pushed up. So closing below it would actually be kind of interesting. I'll keep this visible on just the weekly because it's really kind of like a niche level. Nobody's really probably looking at this, even though it's very valid. The 3D level, the 3-day level is actually a little more interesting to me, just because it's more recent price action. and we'll actually make this available on all the lower time frames. So weekly, we'll see this. Anything 3-day and below, or anything below the weekly, we'll see this. So yeah, this is interesting because we're at this 3-day order block. Again, this never-ending debate of, do you take the wick? Because, you know, this lower wick right here is where the buying stepped in, and then this upper wick right here is where the selling stepped in. So do you want to take this wick and the body, and that essentially lets you know kind of like where the selling happened into this candle? Harsh sell-off. I don't know, but for now, we'll just use the body. We wicked through it, but closed below it. Very interesting. If you're not familiar with why we like these types of levels, we like these types of levels because candles like this, where we left, let's see, left supply zone with high velocity, large candle that left this area, lets you know a lot of selling occurred here. And so when we trade back into it, we're looking for, you know, more selling to happen, which is somewhat indicative of this wick right here. Other thing I kind of wanted to point out that I'm pretty sure we pointed out yesterday, for sure, definitely this this fib retracement. We pretty much hit the 61.8 fib perfectly. Pretty much hit the 61.8 fib perfectly. It was very much aligned with our supply zone. Great short opportunity if you manage to get short somewhere right here. So far, we're about, you know, $170 some below that line. So that would be a great short. And if you had like a stop above this wick right here, then that trade makes sense to me. Don't know why I didn't take it. I don't know. I'm definitely nervous. I mean, shit, why would I short in a very bullishly trending market just to catch a retrace, a small retrace? I don't even know where you would put a target. Maybe back down here, but it's like, who's to say that we come back to this area of consolidation? Like, we've just been, you know, bullishly pushing up. Yes, a retrace is due, but like, who's to say it's going to come now? That's all trading is: high probability, low risk. You never know exactly what is going to happen. There's just usually high probabilities of certain events. So maybe we do get a pullback, and maybe we do see some price action that, let's see. So if we take like the high of that candle, the highest close right there, just want to mark that out. We could totally do something like that. This is not unreasonable. I'm still on the 3-day too, which is something most people don't usually chart on, but I mean, that's just what I was at. And then if we did that, that would be about a 61.8 to 71%, you know, retracement, which is a very reasonable retracement to have. But I highly doubt we take back like 100% of that move, or like, you know, 61.8% of that move, and come back to this level. I'm not saying we can't. I mean, we totally can. I'm just saying I wouldn't feel comfortable taking that trade. I would try and keep a stop very tight. I would more so be trying to look for opportunities to go long rather than going short, right? No point in trying to catch a top or a bottom. Just trade with the trend. Trend's going up. We were pretty bearish here, So maybe you did feel comfortable trying to short this and got stopped out, like I did. But at the same time, even then, that wasn't the smartest thing ever, just because of the bullish volume that we had right here. Um, no reason to think that that was just random buying that was just going to get absorbed and sold off. So yeah, so that's kind of like what we're looking at. What we're looking at as far as like the levels. Um, this high sticks out really obviously, as well as this high, like these little retracements right here. Uh, could possibly see some moves up here, because if people are short, I mean, a lot of shorts really should have been stopped out, but I don't know. If you were going to put a stop somewhere, it would probably be somewhere right here, just because this is so obvious. Let's see. So yeah, already done 61.7 first month's move. On the weekly, does anything else stand out? Of course, breaking this high right here for me personally would constitute a high time frame trend change, simply because this will be our first higher high on weekly time frames looking at candle closes. So breaking this up would be an important event for me to look at, and I think for you all to look at as well. So I did too, yeah, for sure. Probably wasn't the smartest move. Definitely should have. I mean, and I'll show it in a little bit. It definitely looked more like accumulation and distribution, but even then, consolidation is always kind of hard to peg down. But should have just gone with the trend. That needs to be another factor people consider when there's sideways movement. Like, what's the trend? And sometimes the longer the sideways movement is, maybe the more you should consider the trend reversing. Because if an asset is trending very strongly, it'll need to pull back before continuing, or consolidate and accumulate a little bit before going up, or distribute a little bit before going down. But if there's ever like long periods of consolidation, probably need to reconsider the trend. There's usually that means people are about to start a campaign to go the other way. Let's see. What else is important? Yeah, I just don't want to forget what's important. Yeah, I'll just do this for now, and if I think anything else, I will. Oh, something. I thought of something that's important. EMAs. This is the 200 EMA, and we are, of course, bullishly above it. If you are long, you trying to move your stop up, and maybe this bottom, like this hasn't really determined if this is the bottom yet, right here, and you're like, I want to move my stop up, but I don't really know where. Slightly below the 200 EMA might be good. As far as the 12 and 26 EMAs, we literally have just been running away from them. No retraces. You see, when we were going down, they provided very nice short opportunities here, and here, and here. And then we broke them, and then we literally haven't retested since, although they tend to follow price pretty nicely. But we've just been so bullish. It's been very hard. Very similar to this, right? Where we were extremely bullish and we really never touched them. We had a slight wick here, and if you caught this wick, you were literally never out of profit until we dumped. But it was also in confluence with the 200 EMA, daily EMA. So that's another area of support. So it might just take a while. We're coming to this again, right? These might end up being very similar events, where we cross above the 200 EMA. We're about to have the 12 EMA come up and serve, in confluential. I have no idea if that is an actual adjective, but it is one now. A confluential support with the 12 and the 200 EMA. We might touch down. It might provide some pretty nice long opportunities, and then we might top out and make a lower high right here. So that is definitely something to pay attention to. People pay attention to the 2-day. I really never look at the 2-day, but we're definitely above the 2-day. Every time you do this, it just gets more and more bullish because the longer term picture is bullish. So the 3-day 200 EMA is literally looking at the last 600 days of Bitcoin, which of course is bullish. So, despite the downtrend of this year so far. So maybe if you want to look at half days, this is the same as the 100 EMA on the daily. If my math is right, I hope so. Numbers are hard. But yeah, so this is really what we're looking at. Now with this 3-day EMA, you see how we've kind of closed, or not closed below it. This 3 days isn't over. It's over. Let's see. This is the candle of the 25th closing. So 24, 25. So after tomorrow's daily, this should be done. But you see on the 12-hour how we came up, rejected it, and now we're going up against it again. Now, if we reject it again, and maybe even harder, maybe break this low, then yeah, we'd be concerned if you're bullish. But yeah, definitely want to point out those EMAs. That's important. The 4-hour usually also provides very good long opportunities in a trending market. You'll get a little more discrimination of the lines, but if it's trending pretty hard, there's some nice opportunities for longs. And they can kind of help you set your stop, or not longs, just positions in general. And it'll also help you set your stops a little bit. You see here, the 4-hour EMA served as really good support, then broke, then served a little bit of resistance, then it broke up. Never really touched it here, but then here, the 12 and 26 provided great opportunities in this range for a long. And now we're up in here again. So actually for a long position, I am going to look for these EMAs to really come up. And I might consider going long if we touch down on them again. And so real quick, let me plug in my laptop. All right, we're good to go. And so this is, I guess, the main thing I want to show you all, which is very interesting. Y'all know, or if you know me, I really like looking at Wyckoff consolidation ranges. So this one obviously proved to be accumulation. If you don't know what the parts of this are, I can post that in the chat. Post that link. So yeah, I have the components of this accumulation range labeled. This pullback wasn't as sexy as you might have liked, but it did pull back a little bit. We seem to have entered another accumulation range. Or a consolidation range. I don't know if it's accumulation or distribution yet, but what I do have annotated that I think is very important is when you look at the preliminary supply, that's what PSY stands for, when selling and supply becomes a little more dominant over demand, or at least dominant enough to stop the uptrend. Right here with the preliminary supply, look at the selling. It was really not that impressive. And then you see the automatic reaction right here, which is right after all the buying has exhausted itself for the time being, the immediate selling or sell-off that occurs. That's the volume that's associated with it. But then when you look at the automatic reaction for this most recent pump in price, or the preliminary supply for this most recent pump in price, it was huge. It's actually the largest visible piece of volume. Now, that may be because it was like a doji, and this easily could have finished like green with like the same type of wicks. But regardless, this was like stopping volume, or at least it was volume letting you know, hey, like the local top is about to be in. Yeah, I mean, it catches your eye, and then here you have the automatic reaction, that volume, and you can see the range. Like this is a much longer sell-off than, this was like just this was 3 hours. This automatic reaction, and the top and bottom were both some good little wicks, whereas here this automatic reaction was pretty, boom. So definitely something to take note of. How you should interpret this, it means that the trend is getting weaker. It's harder for bulls to just run away, ridiculously uninhibited with price. There is more selling stepping into the market, more supply. It makes sense. People want to sell at higher prices and not lower prices. And so as price gets higher, more people are going to want to sell. At least, smart people. That's what we're talking about. We're not talking about retail traders right now. We're talking about people who know what the fuck they're doing. And, they want to buy low, sell high. And so the higher we get, the more selling is going to occur. So that's something to keep in mind. But that does not mean that this might not end up being consolidation to a point where, let me see. Sorry, somebody just messaged me. To a point where we might break this resistance level. This resistance level was this was the weekly order block. And this was the 3-day. Yeah, this was the 3-day, and this was the weekly one. And you saw the accumulation range happen right, right under or really inside where that selling occurred, absorbed a lot of the selling. People were buying, pumped. And so now we might see something very similar here, depending on the volume profile. And I probably won't track this using Bitfinex or BitMEX just because they've had like record levels of volume, and it's leverage trading, so the volume is misleading to a degree. So I'll probably track it using like some aggregation of Coinbase, Bitstamp, and Bitfinex. But yeah, depending on the volume profile, we might have to start looking at distribution, but I'm pretty sure this is going to end up being an accumulation range again. So you might want to do some buying or put long orders here. Notice how this has a top and bottom set of support and resistances, where this one only has one line for resistance and one line for support. That's because a lot of it just hasn't been set yet. So we don't know where like the range is going to be. So kind of just have to wait for now. So trading inside this right now, this would be your trading range, but it's not as defined as we might like it to be. Trying to think if anything else is important to talk about with Bitcoin right now. Any lines that might be important? Not particularly. Oh, I guess, the only things that you might want to consider are if you are confident in the bear trend, in the overall bear market, like how I am. And if you're wondering, like, well, okay, where the fuck is he getting this? I'm talking about this bear trend right here. If you're confident in that structure, your next question should be, okay, if this is the high that needs to be broken, where is the lower high going to occur between where we are now and this level? So this, I want that showing. So this level right here, this daily zone right here, makes sense. There's really only two. There's not that many resistances left. We've blown through half the market, but oh shit. So there's the resistance we're at now, this 3-day resistance, and then there's this resistance right here. And maybe we top out here somewhere. That's pretty much it. So we're going to say higher high above here, center that, put on top, get rid of that line. So a higher high is above this line, which would be a high time frame trend change. And then possible lower highs might occur where we currently are, here, or really here. If we break this resistance right here, I mean, it would suck to double top right here, but we could have equal highs. I just, I don't know, that would really suck for bulls to retrace, pretty much 100% retrace just to double top again at about 9.9K. Let's see. Yeah, just really trying to figure out where the lower high is. Something you might want to use to assist you in doing that is looking at the volume profile of the dump. And in looking at that, this was a previous point of control. The dotted line I have is the previous point of control. The current point of control is the solid red line. So yeah, this was a previous point of control, which is why we met such heavy resistance here. And this was a previous point of control temporarily, which is why we met such heavy resistance, or why we may meet such heavy resistance here. And we may double top here just because this is a low volume node, essentially no volume there. That's why there were so many wicks that came up into this area. Maybe if you want to look at both the pump and the dump, this was a lot of volume that consolidated and came right here. As soon as this happened, this was the point of control for this range up until we got to the bottom right here, actually. So this definitely looks like a very solid candidate for a local top. I don't think targets at 9.2 to 9.3-ish are unreasonable. Makes sense to me. And if we take a fib, we're somewhere within the 78.6 and 88.6 range. So if you like, deep retracements, this may be a candidate for one. Somewhere up in there. So that's pretty much it. Pretty much all I have. I guess if I'm sharing biases, I'm looking for this to be accumulation, trying to figure out a place to go long somewhere in here. Ideally, I'd like to do it when the 4-hour EMA, or when price dumps down to like the 26 EMA. And even then, maybe I'll back out to like the 12-hour or the daily and try and see those catch up. That would be very nice. But because we're trending so hard, I'm going to look for a downward move that might act as a spring on the 4-hour 26 EMA is trying to go long. And I think the lower high, the weekly lower high at about 9.3, 9.2, somewhere in this range makes sense. And I'd be looking to try and short that. So that's pretty much it. That's all I have. So I will talk to you all later.